Mr. Mark Selby, how are we, sir?
Very good, Mr. Matthew Gordon.
I am glad to hear it. How's the weather at your part of the world at the moment?
Yes, the weather forecasters actually got it right after screaming about a huge storm coming. We
Mm.
actually got it. So we got about 10 inches of snow, and I think probably the most snow in my front yard since I moved in here 15 years ago. I think we've had one or two winters where we've had maybe a little more snow lying around, and we're supposed to get some more snow this weekend. So we'll see what happens.
Well, I think people talk about being beach body ready. I need to be Toronto weather ready when I see it PDAC in a few weeks, by the sounds of it. Right. Okay. Let's talk about the world of nickel. What's the price then for us?
Yeah, so the last 2 weeks, we've basically been in the 15,000 to 15,800 range that we've been in for the most part since mid-December. Obviously, this was Chinese New Year during this time period, which is always pretty quiet. And given China's increasing share of the market, even more quiet. We saw LME inventories tick up another 4,000 tons, but again, still sitting at a fraction of the overall quote surpluses that so many analysts have. Again, pet peeve. At the end of the day, exchange inventories need to equal change in surpluses, unless you can identify some specific inventory stockpiles, which none of them do. So, anyways, I will leave it at that.
We'll leave it at that before we turn into ranting old men. Right. Let's talk about the usual Indonesia, Philippines, China. Some news there.
Yeah. So again, Chinese New Year's over. Things quiet. You could have seen a squeeze. Sometimes see a squeeze into it. But the key piece is this is going to be the the not the $64,000 question, but I think the $64 billion question in terms of the nickel market is just getting a sense of what Indonesian ore availability is going to be. We saw news this week again. The Indonesians are talking about ore, maintaining ore supply at 200 to 220 million tons, which would basically be flat to a decrease in nickel supply this year, which is good. So as I said, we'll wait and see, over the next week or two. We've seen a slight tick up in Indonesian ore prices, but we'll have to see how that goes. Now, one thing that I think I'm wondering whether there's been sort of a satanic bargain between the Chinese processors and the Indonesian miners. Remember, November through February is when the Philippines stops about half of their mines shut down. And I wonder whether the Chinese has said, look, what, we're fine if you want to squeeze supply later in the year, but please don't squeeze it when we can't get any ore from the Philippines. Otherwise, our plants that we've built are going to be running half empty. So again, maybe we won't see the squeeze in Jan Feb, and maybe it shows up in April, May, because that's last year when they squeezed it, right? We've got that chart in our investor deck with Canada Nickel showing that squeeze in production. So stay tuned. Maybe it happens Jan Feb, maybe it happens April, May. But again, the headlines are still heading in the right direction. And fundamentally, the Indonesian government makes way more money with nickel prices at 20,000 than they do at 15. So
right, and I think that the music to most people's ears, certainly Western nickel companies, 20,000 seems to be the bare minimum that they're hoping for. But I want to talk about beneficial ownership. We did a piece a couple of weeks ago about the fact that China might be actually the beneficial owner of about 70% of the Indonesian project's assets, which is a lot higher than most people had realized. What's that going to do in a world of tariffs that the US seems to be imposing on China?
Yeah, that seems to be a word that's come up in the news the last week or two, particularly in Canada. So at the end of the day, China is still enemy number one. So with regard to tariffs, I literally have not lost 1 minute's sleep over despite 10%, 25%, whatever being thrown out there. At the end of the day, anything from China is going to be tariffed higher than anything from Canada, long term, that bottom line. Number two, any sort of global tariffs, all that does is kind of reshuffle, metal production around. And so, the big benefit for, the products that we're going to be producing, nickel, chromium, cobalt, as well as some iron, low carbon iron, those products are in short supply in both the U.S. imports all of their nickel and cobalt, and Europe imports most of its nickel and cobalt. And so if the U.S. decides to be stupid for a couple of years, it's fine. We can ship all our material to Europe. And even on the iron and steel side, at the end of the day, the Europeans are the only ones who really pay a premium for low carbon material. So again, if we had to ship it that way, it's a little extra in shipping cost, but it's not going to impact the economics of our project one iota. So
right, but in terms of I guess industrial partners and their ability to look into the future, in terms of bankers, in terms of ability to look into the future, tariffs are very confusing. They don't tend to last long, but no one's got a line of sight as to how long, and that does affect pricing and so forth. So for companies like yourself at the moment, lots of questions to answer on that, or opinions that you need to share on that topic, I suspect.
Yeah. So the good part is again, I think there's a fundamental supply demand issue. Again, we've had huge interest out of the Middle East. I've had a number of follow-up meetings since that time frame. I've been in multiple discussions with U.S. and European steel companies. Again, who at the end of the day still need to go on with business despite all of this, tariff noise floating around in the background. Ultimately, it will probably have at least another sort of 6 months noise of this. But, Trump backed off once when the stock market tanked and interest rates went up. U.S. inflation ticked up yesterday. Interest rates ticked back up again. Again, consumer confidence has come off. You're going to see business confidence come off, for that very reason. With all this noise, it's like, I'm just going to sit on the sidelines before I decide to expand my plant or, build a new plant. I'm just going to wait another 6 months to see what happens. And once that trickles through into the stock market, once that trickles through into interest rates, and it heads in the wrong direction, Trump all of a sudden and his buddies are going to shut up about up tariffs, and we'll get back to kind of business as usual, going forward. So
right, and I guess ultimately, I know you say you're not too worried about the US. Certainly to ship there, you can ship to Europe if things are still a little bit funky. But I'm more interested in really in terms of that kind of that triumvirate of China, Philippines, Indonesia, in terms of how they play that game, going to the future, and how they're going to manage that, the pricing in the market. We've talked, ad nauseum about pricing in the market being controlled over Indonesia. Big concern from investors is that Indonesia will make that decision for all of us. What's the reality in a kind of geopolitical environment like this, where as you said, China is enemy number one when it comes to the kind of critical minerals?
Yeah, so I think at the end of the day, U.S. car companies, European car companies, will not want to be dependent on Chinese controlled supply. And again, those read through things of, okay, yes, it's a Singapore company, but it's actually controlled by a Chinese parent. Those things will come to light. As soon as alternative supplies like the kind that we can bring to market are available, then the car companies, will have a chance. Again, nickel's used in a huge range of aerospace and defense industries. They're not going to depend on Chinese controlled projects out of Indonesia for those nickel units in those applications. And so, ultimately, and again, nickel and critical minerals is a national security issue. U.S. government, all governments are going to keep throwing money at these things until they see supply come from somewhere other than China and China's proxies countries, whether that's Congo, Indonesia, and elsewhere. So, again, that's the geopolitical reality that that's there. And those of us who have critical minerals projects in countries, that are Chinese controlled, will ultimately benefit in the long run.
Right, and how is it affecting others in China? We mentioned those three, but there's obviously Japanese, the Koreans, battery manufacturing, steel. It's a confusing time for them as well, and they're sort of nearer to the issue, I suspect.
So post the election, the Koreans were basically sitting on their hands for a while through last year, just because there was nervousness around what the EV growth rate was really going to be. And there was nervousness around, who was going to win the election and what that looked like. Again, Trump is creating a bunch of uncertainty as Trump, but, at least now, it's within a range. And ultimately, again, with tariffs, at the end of the day, the closer you can bring supply to the U.S. market, the less likely you're going to get tariffed, right? And the further away you are away from China to bring those raw materials into the United States, the less likely you are to be tariffed. So, we've seen a massive pickup in interest, post the election in November. And that hasn't slowed, down at all going forward. So,
okay, exciting times. And I guess for the, casual observer from outside, it's going to be a very important sort of 6 months going forward. For sure. Right, let's step away from tariffs. Let's get into market news. What have we got?
Yeah, so the big one is Philippines announced they've put legislation to be passed through government, and so it's sad when the Philippines seems to be actually more effective government than the U.S. right now, because it's not an executive order; it's actually legislation that's going into Parliament, their equivalent of Parliament. And so they're looking to put an ore ban in place in 5 years, kind of mimicking what Indonesia had done a decade earlier. That's bad news for Chinese ore supply, because that's the primary. The Philippines probably provides 90% of the ore that goes into China today. In terms of, is this another, huge, Indonesia looming on the horizon? The reality is, it's unfortunate for the Philippines. They should have, probably done this 20 years ago when they still had some higher grade material that's left. But as we talked about, laterites are very easy to high grade. They've been high grading laterite ore from the Philippines. It was shipped to Japan, 40 years ago. So they've been high grading for close to 40 years, and so most of the ore that's left is pretty low grade. And to underscore us, the lack of real opportunity for projects that are there, Sumitomo Metal Mining, is the one non-Chinese company that's made pressure acid leach plants work. They built 2 of them in the Philippines, and as of right now, they don't have any other plans, to build any other HPAL production in the Philippines, as of right now. So you may see 1 or 2 HPAL plants get built, but there will not be a huge wave of production capacity that gets built in the Philippines.
Wow. Okay. So even the big guys are nervous.
Yeah.
Wow. Okay. Right. Company news.
Yeah. So there's been actually, despite all of the noise, in largely, I would say, the copper world, there's been a bunch of financings gets done. So kudos to Terry Lynch at Power Nickel, which is what I was calling it Power Copper. They've raised $40 million at a big Quebec flow through premium. That's the theoretical, I think, is over 100% premium. And then they've said that Friedland and McEwen, who are shareholders, were participating in that. So great to see that get done at a big premium. Magna Metals, who, again, those deposits they've got in Sudbury, the potential there is largely copper. Going forward, did a nice $25 million convert plus common share raise. And then on the pure nickel side, or at least polymetallic nickel side, you saw Critical Minerals with the project in the U.S. Get $400,000. NorthX Nickel did just over $1 million. And then First Atlantic Nickel is that Warite project in Newfoundland. Has done a $3 million debt deal that's there. So, again, nice to see some money getting raised out there in the market.
Good. And what about you boys? You're not to be left out.
Yeah, so we got the best kind of money, which is government money. So $3 million in funding from Natural Resources Canada for continuing to advance our IPT carbonation work. That was great news and good to see. For us, is generally non-dilutive financing, which is always the best kind. In terms of other news, there really has not been a lot of news flow over the last 3 or 4 weeks. Power Nickel had some decent step-out copper results from their project in Quebec. Last call, I forgot to mention that Premium Resources down in Botswana did some, again, good infill extension results at their Botswana properties. Which are, copper, nickel, and so forth. But, that's largely it. Australia's, gone quiet in terms of nickel news for the most part. And real so, quiet.
I spoke to Widgie this morning.
What's that?
Win Metals with their Widgie project, which spun out of Neo Metals. And, they basically put that thing on ice and focusing on gold. So,
yes.
Yeah, Australia's gone real quiet.
Yeah. No, exactly. Which is, usually a good sign that things are about to turn.
Okay, well, there we go, folks. Little roundup, short and sweet and to the point. And I'll see you in Toronto land at the end of the month, I think.
In a couple of weeks. Sounds great.
Yep. Okay, Mike. Appreciate your time today. Thank you.
Take care.